The cryptocurrency sector is more than ready for a new beginning in 2023 after the instability and tremendous carnage of the previous year. A future free of billion-dollar failures and sky-high customer pricing would be nice. But as recent events have shown, that day may be far off. Already, news stories are as outlandish as they were during the most outrageous times of 2022. In this video, we'll take a closer look at a few of these stories and discuss how they may affect the digital assets market as a whole. Does it look like crypto will have a bad year in 2023? By the time the video ends, we're hoping to have an answer to this crucial topic. Welcome back to Market Empire. Let's start with the story/controversy between cryptocurrency exchange Gemini and digital currency organization, the parent company of crypto pioneer Genesis. Genesis Global Capital halted withdrawals and loan originations on November 16. After Gemini, the Tyler and Cameron Winklevoss-operated cryptocurrency exchange announced that customers on the platform's Earned program will not be able to withdraw their finances until Genesis resolves his issues, it confirmed that the decision made as a result of severe market displacement and failure of industry trust caused by the FTX meltdown would not affect the firm's trading and custody businesses. Gemini announced, Genesis Global Capital, the Earn program's lending partner, has suspended withdrawals and will not satisfy customer redemptions within the SLA of 5 business days. We are working with Genesis to assist clients in redeeming Earned program funds fast. We'll update you soon. On January 2nd, according to the Gemini Earn Updates page, Cameron Winklevoss, co-founder of Gemini, took matters into his own hands by writing an open letter to Barry Silbert, CEO of Genesis parent company DCG, expressing his displeasure with the continued denial of withdrawal requests from Gemini customers. According to Winklevoss's letter, it has been 47 days since Genesis ceased processing withdrawals, including the $900 million it owes to the Gemini Reward program. It is written in an open letter that is afterward buried. It has been 47 days since Genesis stopped payments. I am writing on behalf of the almost 340,000 verified individuals who have earned the right to receive this message. You're not dealing with a faceless corporation when you borrow from these users. They include a single mom who will lend you enough money to pay for your son's college tuition, a father who lent his son's money, and a married couple who will give you 6 weeks' worth of their life savings. We've made every effort to work with you in good faith, so that we may agree that you will repay the $900 million you owe while protecting your business. It's becoming obvious that you've been using stalling tactics in bad faith. Winklevoss writes that he and his lawyers and investment bankers are sitting in their ivory tower waiting for everything to evaporate magically while he drives drunk down the highway. He further claims that some of the $1.675 billion in DCG's Genesis is held by consumers with Gemini income. By the end of the open letter, he demands that Silbert make a public pledge to work with him to resolve the issue by January 8, 2023. According to Silbert's response to Winklevoss's open letter, DCG did not take a loan from Silbert's wholly owned subsidiary as Winklevoss had claimed. The following is his tweet. DCG does not owe Genesis anywhere between $1.6 and $75 million in debt, and DCG has never been more than 1 month late on an interest payment to Genesis. Following his tweet, Winklevoss shared the following information on the next low maturity date, which is May 2023. Again, you've proven me wrong. Give up the charade that you and DCG are helpless spectators who had nothing to do with starting this catastrophe. The debt of $1.675 billion to Genesis cannot have been incurred through borrowing by DCG. Little 2023 customers wanted to see. A feud between 2 crypto billionaires played out on Twitter while onlookers could do nothing to stop it. In the crypto space, we had our share of multi-billionaires. The decline of Genesis and DCG may adversely affect Grayscale Investments. DCG's digital asset management organization has the largest Bitcoin, equivalent to 3.28% of all Bitcoin in circulation, as well as Ether Classic, value $189 million. Zen worth $5.7 million, Zcash worth 2.53%, and Ether 2.52%. Another multi-billion-dollar collapse might occur if Grayscale is forced to sell assets to pay out Genesis debts. The scale of the damage to the crypto empire headed by Barry Silbert was shown this week by the controversy surrounding Gemini and two major headlines concerning DCG and Genesis. On Thursday, Genesis announced that it would be laying off another 30% of its personnel, just a few months after announcing a 20% reduction. The cryptocurrency hedge fund lost $2.4 billion after it could not cover margin calls in December of 2017. It's good knowledge that Sam Bankman-Fried's Alameda Research received substantial funding from Genesis. In a separate announcement on Friday, DCG said it would be shutting down its wealth management section, HQ, which purportedly managed over $3.5 billion in assets. Reportedly, DCG and Genesis aren't the only crypto companies to announce large-scale layoffs recently. After a drop of nearly 40% in its stock price, Silvergate, a bank specializing in cryptocurrency, also announced the loss of 40 positions. Reports surfaced earlier this week that U.S. officials had seized $143 million worth of cryptocurrency from accounts stored in Silvergate Capital following the bankruptcy of the FTX cryptocurrency exchange. In its inaugural earnings report, Silvergate attributes an $8 billion decline in customer deposits to FTX's demise. From $11.9 billion in September, the cryptocurrency-focused bank had its value drop to $3.8 billion at the conclusion of the fourth quarter of 2022. Silvergate's stock price has dropped by a total of 69 points since the FTX crash. Another one has fallen. In 2023, the crypto industry hopes not to suffer a crash. Meanwhile, Justin Sun, the inventor of Tron and an advisor to Huobi, tried to downplay the news that Hawaii's cryptocurrency exchange would be cutting its employees by 20%. A representative for the exchange had confirmed the layoffs, saying the organization intends to continue operating with a minimal personnel size. Huobi employees claim Justin Sun has attempted to dissolve the company through the use of false Twitter accounts that reassure the public that everything is fine when it is not. Concerns have been voiced on Huobi's end that someone is attempting to rub and pull employees at the exchange. Chinese-language tweets have even suggested that Huobi's official trading volume proof of reserves might be bogus. Coincidentally, in 2023, authorities and prosecutors, particularly in the United States, have paid closer attention to the Bitcoin industry. Letitia James, the Attorney General of New York, filed a complaint against Alex Mashinsky on January 5. The claim alleges that Mashinsky and Celsius defrauded hundreds of thousands of investors, including more than 26,000 New York residents, out of billions of dollars worth of crypto assets. And the asset purchase transaction between defunct cryptocurrency firm Voyager and Binance, US to US, an arm of the prominent cryptocurrency exchange, the US Securities and Exchange Commission, SEC, has interfered. The regulator filed a limited objection to the purchase deal on Wednesday, saying it looked into potential violations of Voyager and other parties' anti-fraud provisions of US federal securities law. Binance's U.S. capacity to complete a deal of this size and the nature of the exchange business operations were also asked if the acquisitions planned for Indonesia and the EU were to go through. Many governments, like those in Russia and Israel, are working on new cryptocurrency regulations to rein in the business, which they claim has gone out of control. According to sources, a national cryptocurrency exchange is expected to launch in Indonesia in 2023. While the head of the country's financing and risk management commented on the shift in authority, stating that crypto assets have become an investment and financial instrument, he emphasized the necessity to regulate them on par with other financial and investment products. How will you anticipate the value of crypto assets that will develop in 2023, given all the turmoil in the cryptocurrency industry? Compared to 2022, do you anticipate a rise or fall in volatility? Leave your thoughts in the comment section below. As always, we appreciate you tuning in, so if you enjoyed what you saw, I'd greatly appreciate it if you click the like button, share this video, and subscribe to the channel.